Why? Because while the Bank of Japan is talking about, looking at the interest rate situation and maybe raising them a little bit, I mean, they're not going to raise them really. If there is any change in monetary policy, they'll probably raise it by 0.25% or something like that. And of course, there's the good old USA, with a debt to GDP of about 130%, and foreigners selling the dollars, as I just said, particularly the People's Bank, selling dollars. You've got the Japanese institutions selling dollars as well, because they've got losses on their bond investments in US treasuries. So one way and another, there is a funding problem. So what does the Fed do about it? Lower interest rates? No, it's got to keep them up, because it needs people to borrow yen, sell the yen, buy dollars, and pick up the carry trade. I mean, the carry trade at the moment is giving you a nice sort of 5% plus turn. As long as that continues, then it defers the fund.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Good evening. In today's economic update, we delve into a crucial discussion by Alasdair Macleod on the intricate dynamics of the global economy, focusing on gold acquisition, fiat currency depreciation, and strategic maneuvers by Asian central banks. First, Macleod highlights the persistent gold buying by China. Contrary to popular belief, this isn't about gold's rising value, but rather the falling value of fiat currencies, particularly the dollar. China is securing assets with no counterparty risk, such as gold, instead of unstable fiat currencies. Asian central banks, especially the People's Bank of China, are systematically selling off their dollar reserves and opting for gold. This move indicates a deep mistrust in the stability of Western currencies. Macleod also discusses the debt traps many Western governments are ensnared in. In the UK, the recent election of a left-wing Labour government has led to promises of extensive public spending without adequate funding, potentially driving the country towards economic decline. France faces similar challenges. The far-left administration's determination to lower the retirement age and increase public spending is likely to lead to unrest and financial instability. Turning to Japan, Macleod notes that despite the Bank of Japan's discussions about raising interest rates, any hike will be minimal. The yen's weakness fuels the carry trade, temporarily alleviating funding pressures in the US, but underscoring global financial fragility. In the United States, with a debt to GDP ratio of about 130%, the Federal Reserve faces a dilemma. Lowering interest rates could exacerbate inflation and economic instability, yet high rates strain financially vulnerable businesses and individuals.
Funding problem of the good old US of A. So you can see that all is not well in the world. It's all very, very distorted. The idea, I mean, everybody's praying for lower interest rates because so much of the private sector is zombified. Without lower interest rates, government debt traps are being sprung. We need to get lower interest rates. But the reality of the situation is that interest rates are not about managing the economy. They're about reflecting the loss of purchasing power of a currency. So that's going to continue. And at the same time, because banks are trying to de-risk their balance sheets because they're very highly leveraged, what they're doing is they're raising rates against anyone who wants to borrow. That is assuming that they can be persuaded actually to extend any credit. So the idea that this is a time when interest rates should be falling and all the rest of it, I mean, I'm sure the banks hope that the central banks can muscle rates down because they've got loans out to customers who are basically zombies. And their business plans are just completely shot at these levels of interest rates because nobody expected them to come up here. But so that decay is a slow burning fuse, which means that businesses are going to just go progressively into worse and worse financial conditions, with them becoming insolvent and going bankrupt. This is not a sort of happy time, but what we're looking at, I think, at the moment is the sort of situation of calm but strong, nasty undercurrents likely to sweep us out to our deaths, and by drowning at sea. I'm sorry, I'm mixing my metaphors a bit, but you can see where we're going. It's the undercurrents are actually really very, very nasty in the current situation. And then on top of that, of course, we've got the potential for war in the Middle East. That's increasing. I mean, I understand that an aircraft carrier group has been sent by the American Navy to the Eastern Mediterranean. Now, if that results in an attack on Hezbollah, then that's going to bring Iran into this situation, and that is very bad news. If that happens, this recent rapprochement between Iran and the other Gulf states, particularly Saudi Arabia, will go on the back burner, because as far as Iran is concerned, they will then shut the Straits of Hormuz, and they wouldn't care too much about who gets hurt in that, because they are looking to protect their own interests, not the interests of the whole Arab world. So this is a difficult time, I think, geopolitically, certainly in the Middle East. That could blow up any moment. And on top of that, of course, there's the Ukrainian situation, and it is clear that we're not winning on our side. We're not winning this proxy war. And it's interesting to see that Viktor Orban has taken the initiative as president of the European Council to go and talk to President Putin. He also went to talk to Zelensky. Now, we don't know the details of the conversation, but I'm pretty sure that what he said to Zelensky is, look, this is just complete lunacy. Are you really seriously prepared to stand by and watch your citizens being killed to satisfy the Americans? Which is really what the situation is. He's gone to visit Putin. He's spoken to Putin, and he's now in, or just come back, but basically he's been speaking to President Xi in Beijing. Now, all his colleagues, if you like, in the European Council are saying, this is absolute nonsense. I mean, how can he go off without the agreement of the Council and, talk to these enemies? So, but the European Council do have a problem, because gradually there is a recognition that they've got to find a way out of this problem. And Orban is taking the bull by the horns and driving the way out into, if you like, some sort of negotiation to try and find peace, to try and effectively achieve, I think, what Putin has wanted all along, and that is to drive a wedge between America and Europe, and for Europe to look after its own affairs and not kowtow to America. So all these developments are going on. And then, of course, we have, I'm very sorry to say, an American president exhibiting all the signs of senile dementia. I read sort of off-the-record comments about his dementia and how everybody's pussyfooting around him when it comes to talking to him, because and this is a feature I've seen in senile dementia. They just fly off the handle. I mean, you say something which upsets them, and all hell breaks loose. They go so angry. And so when you've got a president, to whom everybody defers, to have that thrown at you, you can imagine what it's like in the White House. All this sort of pussyfooting around. And this is a man who, allegedly his wife is refusing to let anyone deter him from standing as president again. I mean, as in this condition, he appears to be absolutely determined to stand as president. it's getting too late to find a replacement, really. And under these circumstances, we're going to see, if you like, when we're likely to see Trump re-elected. Now, I think that's a sort of two-edged sword. It's good for, maybe improving the prospects of peace globally, because Trump takes a rather different view of Putin than the current establishment, which was something echoed, incidentally, by Nigel Farage just before our general election, which of course got everybody up in arms. The man doesn't know what he's talking about, and he's a Putin lover, and all that sort of mainstream media stuff was thrown at him. But it's an interesting point that he raised deliberately. He knew what he was doing just ahead of the election. And I think it's a view which is actually shared by a lot of people on the quiet in this country. Nobody loves Putin, but we like war even less. So, I think that, if you like, the good side, perhaps, of Trump's potential re-election as president is that aspect. But on the other side, I mean, he's a spendthrift, and that's the impression we get anyway. So the debt situation is going to get even worse. He's also a trade, he's very sort of insular, protective of American trade, American business, make American great, and all the rest of it. And that is going to turn out as a big driver of prices, or put more accurately, the loss of purchasing power of the dollar on the domestic American front.
On the geopolitical front, the potential for conflict in the Middle East is increasing. The recent deployment of a U.S. aircraft carrier group to the eastern Mediterranean signals escalating tensions that could disrupt global oil supplies and destabilize international markets. The ongoing conflict in Ukraine is also significant. Viktor Orban's recent diplomatic efforts highlight a growing recognition among European leaders that a resolution is needed. This underscores the divide between Europe and the U.S., with European nations seeking greater autonomy from American influence. Lastly, Macleod expresses concerns about President Biden's cognitive abilities and the implications of his potential re-election, adding another layer of instability to an already volatile economic environment. In related news, gold continues to be emphasized as a stable asset free from counterparty risk, with Asian central banks, particularly China, preferring gold over unstable fiat currencies. This shift highlights the falling value of fiat currencies, spearheaded by the dollar, prompting a strategic pivot to gold. That concludes our economic update for tonight. Thank you for joining us.
Western capital markets, because when we deal in gold and silver, we are dealing predominantly in paper equivalents, which in theory are deliverable at the end of the day in gold or silver, but all the physical stuff is basically walking out of the door. I mean, you just look at the deliveries on COMEX. Virtually every day there are contracts stood for delivery, and we're talking about substantial quantities. Gold is also leaching out of London. It's more difficult to actually sort of, if you like, track the numbers there. But we just do know that all this gold and silver is just going out of the door, and it's no longer in our vaults. So where does that leave us? It leaves us with a huge, great problem. It leaves us with, if you like, a gold bullion community who are operating on the basis of what they know, and that is really from Big Bang, 1980s onwards, when gold is just a counter, if you like, a very good counter, and a source of enormous profits. It started off as the carry trade, rather like the Japanese yen today, because what you could do is you could lease the stuff from a central bank at a lease rate cost of around about 1.5%, maybe 2%, and then you could stuff it into US T-bills, which would be yielding you, at that time, we were looking at 7 or 8%. I mean, what's not to like? Leverage it up. And so gold was going out of vaults, into the market and disappearing, never coming back. And by a process of elimination, I can say with some confidence that the US Treasury does not have gold it purports to have, and nor, I believe, does the New York Fed have the earmarked gold which it purports to be storing on behalf of foreign central banks. And we saw this with the difficulties they had satisfying the demands of the Bundesbank, 10 years ago, to get a small amount of the gold held on their behalf, the New York Fed repatriated. And also every time, they take over, organized regime change, whether it's Libya or Ukraine, one of the first things that allegedly happens is that Black Hawk helicopter comes in with all these chaps dressed in black. They go and they raid the gold out of the central bank vaults and then fly off with it. This has sort of happened too often, if you like, for it just to be conspiracy rumor. It's sounding a bit more like fact. So there is a shortage of gold in official vaults in the West, which is unaccounted for. Meanwhile, it's all gone over to China and increasingly Russia, which started in this game only really at the time of the special operation in Ukraine and sanctions. At that stage, they stopped selling gold into the London market. All this gold is just going out. It's just flying away from us. And why? Well, at the end of the day, it's because the majority of the world by population, or the central banks representing the majority of the world by population, is really dumping our currencies. This is a very serious point, which, of course, we don't really fully appreciate, but we will discover to our cost. We will wake up one morning and suddenly realize what the hell's happened.
The other thing that you focused on in this, I wanted to drill into again, and that is that the contrary to the advice that most mom and pop investors in retirement savers in the U.S. have been hearing from their traditional retail investment advisors who say, stay in the market, 60-40 stocks bonds portfolio, buy on the dips, it always comes back, you're going to get 7% a year over year on average, all that has been true by and large, at least on a nominal basis over the past 40-year regime of falling interest rates. But U.S. was able, if I'm understanding you correctly, the U.S. was able to get away with driving down interest rates on the bonds without foreigners significantly dumping bonds, because there was kind of a carrot and stick. In this case, the carrot would have been higher rates, but they were withdrawing the carrot, but they were using the stick of you've got to use the U.S. Treasury and the U.S. bonds for your trade settlement. You've got to hold dollars so that you can have a reserve of that for settling trades, etc. But now that the BRICS nations are wise to us and are pivoting away to a new methods of settlement without the dollar, the stick isn't going to be working anymore, and now the carrot may have to come back, or is coming back, of higher interest rates in order to entice foreign holders of the U.S. Treasury, without whom they won't keep financing the U.S. deficit. Can you elaborate on that?
Yeah, the point behind it is that the rates will be set by the market, not by the central banks. There's no doubt that what the central banks want to do is to get rates down. If the Fed could somehow manage rates lower and at the same time fund the US government deficit, then they will be very cheerful about everything. But the reality is they can't get rates down. Why? Because the market is telling them, you've got a debt problem. And that is actually going to set the whole thing. There are two basic drivers of interest rates. The first is the foreigner's view of your currency, and that is desperately important. And that is what we have been concentrating on when we talk about, it's dollars going down rather than gold going up. And the second is that when banks turn cautious, then they will only lend at higher rates, if they lend at all. The problem that banks have, specifically this time round, I mean, it's a fluctuation that happens as part of the lending